welcome back from break. I had to use Thriller, one of these songs, right? The best song on that album is Billie Jean. But we had to use the namesake. So the next part is going to be some trading things that we're going to touch on, but we're not going to do super deep dives because there's just not enough time, and this is an indicator focused class. But I do want to touch on this stuff because what I want to do is just put it in your bucket, and then for those of you that are interested in these things, you then can go and expand on that on your own. So an example would be like Fibonacci, right? Am I going to teach you everything I know about Fibonacci from the top down? There's not enough time. But if you're not aware of Fibonacci, I'll lead you into it, and then that'll create a branch for you to explore. Same thing here with multi-timeframe analysis. So for this next part, be aware that we're just going to touch on some of the most important things that I have found in trading that are outside of the indicators. We're going to then touch on psychology, which is a huge one that I will spend some time on. And then we're going to dive into the charts. So price cycles. So this is the idea of using multiple price cycles. Essentially, everything's kind of rolling in this rhythm, right? Everything's a series of waves if we want to get really abstract. And you have the big waves, right? The big trends, and then inside of that you'll have the little trends. And then inside of those you'll have even smaller trends. So you'll have a big monthly trend, and then you'll have weekly trends that ebb and flow inside that larger context, and inside of the weekly trends you'll have daily trends, right? And you can go as down the rabbit hole as you wish, but this is essentially what they look like. So just an example of multiple time frame analysis. We're going to cover this maybe a little bit more in the chart work. I'm going to make a note here to review IWM because that was one that came up, at least on my end on the Friday video. So you can always just look one time frame down is basically the point of this. So if you're a weekly trader, you can use the daily to guide yourself. If you are a day trader, maybe you can use the 15 and the 5. Or if you're a really experienced day trader, maybe you can use the 5 and the 1. Prioritize longer term over shorter term, but understand that short term changes first. So short term will shift, then that'll shift the longer term. Multiple time frame analysis is an entire class unto itself, so we won't be able to go into much detail, but I do want to touch on it, and we'll actually touch on it a lot more with practical examples once we get to the charts. So this is what my weekend setup looks like. On the left monitor, you can see I have quarterly, monthly, 3-day, 2-day. The center monitor is weekly, daily, and so on and so on. So I like to, cover my bases. You don't need to do this much stuff. Again, I'm kind of an extreme version of everything, but if you're if you're a day trader and you trade maybe a 5-minute, maybe use a higher time frame like a 15 to confirm, or a lower time frame for a trigger. That's basically the general idea here. Level, momentum, and trigger. So this one's important. This one is going to be important because this is where we start to tie in the indicators with actual trading strategy, right? So far we have a lot of scores and the buy and sell bubbles. We have the lower indicators, but we want to be able to turn that into executable trade ideas because that's the whole point. So always think in terms of LMT, level, momentum, and then trigger. Waiting for LMT to confirm a trade will often lead to much higher probability of success as you have multiple points of alignment in your favor. This requires patience, but the edge is worth it. So let's break all these down. What is L, or levels? So levels, think of these, you can use the word levels, but think of them also as just points of interest. So what are some examples of points of interest? Previous highs or lows, and you can use the swing level for that, right? So essentially the idea is, here's basically the idea. You want to take action at a level that if you're wrong here. What you don't want to do is have a level here, you're buying here and your decision to get out is here. The distance matters. Here you buy here at the level and you're wrong below the level. Here you're buying way above the level and you're still wrong below the level, just the distance is large. So this slide is essentially what levels to use, and then the next slides will be how to take action at those specific levels. So you can use the swing levels indicator, very good for that. You can use the short-term moving averages, which is the 10 and the 20, as support or resistance, but only in trends. You can use long-term moving averages, but be aware that those are going to be neutral to weak trends. You can use a VWAP or an anchored VWAP. This is something that if you're not using on your charts, I definitely recommend. We won't be getting into it deeply into this class, but essentially just it's built into TOS, it's built into TradingView. The easy way to do it is just to anchor it to the beginning of the year. Very lightweight and highly beneficial. And it is an example of a very strong level that you can look to take action based on momentum and triggers, which we'll cover next. You can also use major Fibonacci confluence zones, extensions or retracements, 618s, and then you can also use voodoo lines, trailing ATR, quant pivots, spot gamma, etc. as levels. Okay, so there's a lot of different levels in the market. It's up to you to decide what is relevant, but the number one thing that you're going to be looking for is a level so that you have a wall to put your back against. And if you're wrong on the trade, then you're wrong always small because you, you placed yourself next to a level, and then you can take action from there. So M is going to be the LMT, right? So level, momentum, trigger. What are some examples of momentum shifts? So a high-low thrust arrow in a neutral market would be one. True momentum crossovers, so the fast would go through the slow, would be another. Divergences on true momentum, EMA crossovers on lower time frames. Let's focus just on the first two. So here's what it ends up looking like. I'm going to start sketching everything out. So level, we know, right? Let's just use kind of a basic one where you kind of have a chart like this, right? And that's your level, right? Easy W-shaped pattern with a level right there. Okay, so where would your stop be? Probably right here, right? That's probably where everybody's putting their stop. Be aware that everybody's putting their stop there, but for good reason. Okay, so let's say you bought at the level, right? Or you're making the decision. Let's maybe do this. Price went down, it goes up, it's down again. It's at the level. Okay. Level, momentum, and trigger. Now, the funny thing is, the indicator is going to take care of this for you, because if it's truly like a trending level, it'll just print a buy or a sell. This is something that you have to do when the candles are gray, because keep in mind, the logic for gray candles is not going to have all this dynamism around buys or sells. Gray candles are most of the time not going to trigger anything. So if you're inclined to do something while the candles are gray, then this is where the pilot has to take back over the plane. So you have a level here. Check. Okay, what's your momentum? Well, let's say that you had a down arrow, and then you caught an up arrow, and then currently you're in the middle of a down arrow, right? This gave you a down arrow here. What would an example of a momentum shift at the level look like? Well, you would get down to the level, and then you'd print an arrow on the high-low at some point here. Okay, well, then that would give you your momentum. The last bit is the trigger. The trigger can be done in any number of ways. There's an infinite number of triggers you can use. Breaking the high of the low bar would be one. Moving average crossover would be another. Using a smaller time frame to confirm that the candles have changed colors. So let's say, for example, in this example, this is a 5-minute chart, right? We have our level, check. We have our high-low arrow, that's our momentum, check. What can we do? Well, we could drop down to a 1 minute. I probably shouldn't use this example. Let me make a 15 and a 5. I don't want to encourage a lot of 1-minute action out there. Let's say it's 15 and 5. We can then switch to a 5-minute chart, right? And see if the candles have shifted colors. You can switch to a 5-minute chart and see if it's made a higher high or a higher low. There's a lot of different triggers. I don't have time. I'll show you some here in just the next slide. But this is essentially what it ends up looking like. You want to get to a level, you want to have a momentum shift, and then we're going to look for a trigger. And I'm going to give you an example of that in the next slide. So examples of triggers: closing above or below a swing level or any point of interest. A high-low thrust signal in the direction of the trend. Closing above the high of the low bar. Closing below the low of the high bar for bears. Or a moving average crossover, usually on a smaller time frame. Right? There's many, many triggers you can consider, but these are some of the most common ones. The main takeaway from this is really make it your own, because I gave you an example of many different levels. Now you're going to have way less momentum changes because I've given you your momentum indicators, and those are going to be either arrows or bar color changes, right? So those are somewhat limited. And then you have any of these triggers, or you can make up your own, right? But really the takeaway here is think in terms of, do I have a level? Do I have the right momentum? Check, check. Last check. Do I have an internal trigger? If you have all three things, you could take the trade. So basics of Fibonacci. So again, very basic stuff here. Just running highs to lows, looking for 618s, looking for the 1618 extensions, 1272s, right? You guys are all familiar. Most of you are going to be familiar with this. I show you this not as a part of the class necessarily, but just as something for the folks that maybe aren't familiar with this stuff to say, hey, that might be something I want to learn more about, and then they can go learn more about it. So just a basic Fibonacci retracement. Here's some basic Fibonacci symmetry, right? So 1 is the most weighted level, just basic stuff here. Again, just to whet your beak, not necessarily part of the class. More Fibonacci symmetry. And this is going to be most helpful for the folks that are like, what's Fibonacci symmetry? Oh, that looks kind of interesting. Let me go read, Fibonacci Queen's book, which is a pretty fast read. I read it on a flight to Chicago. So Fibonacci miscellaneous to know. The most important level is going to be the 618 or the 382. Same idea, just inverted. Fibonacci is projected support or resistance, which I view as secondary structure between highs or lows. So I personally do not view Fibonacci on the same level as I do horizontal support or resistance levels from previous highs or lows. If you're grading out your levels, right, from like A tier to B tier to C tier, A tier is horizontal support or resistance. Just because I'm viewing it as lower quality than that, Fibonacci would be B tier or C tier. So be aware of that. Price targets and stops. So there's lots of different ways that you can find profit targets. One easy way is previous swing highs or lows, just taking your profit back at the the double top, the double bottom zone. Doesn't mean it's a double top, but you could take profits at that zone. Fibonacci extensions or retracements would be one, especially with the current market, we're trading at all-time highs. If you look to the left side of the chart on something like the QQQ, there's nothing there. So there's nothing to reach for as a target. So you would just use Fibonacci for that. Any other type of support or resistance, like a previous high or low or moving average. Okay, so just many, many different ways to do this. I'll say it again, just touching on this stuff intentionally, slightly superficially because of the time limitation. This is only intended to whet your beak if you're interested in any of this so that you can go ask more questions as to how this works. The focus is the indicators. So in terms of stops, the best stop is really to ask yourself, what was the reason you got into this trade? One thing that I think would be super helpful for all of you guys would be if you kind of, in your mind, pretended like you were on this end of the mic. In the same way that, we have to talk as traders on this end of the mic to 100 people of varying skill sets and experiences and life paths, and in our best way try to convey one singular message to this group of people that are very diverse. Ask yourself, could you do something like that? Like if all 100 of us in here were standing behind you as you trade and we're asking you questions, could you answer them? And if you can, then you're ahead of most people. So the best question to ask yourself is, why am I in this trade? Articulate it, write it down, say it out loud. Once you've done that, if any of those conditions have changed, the trade is no longer valid. if I got into a trade for one, two, or three reasons, and now one of those reasons is no longer true, well, I only have two out of three. So, that's a 66%. Back in my day, that's a D. Modern grading, I think it's a B plus, but not good enough. If any of the reasons that you got into the trade are no longer valid, in my opinion, that's the best way to take a stop. There are reasons that you're going to have to take an actual stop. Like, I need to take a stop below this number, especially if you're trading futures or something highly leveraged. But in general, I think that if you can start the trade by saying, these are the reasons I'm in this trade, and then as the trade progresses, always ask yourself, are these reasons still valid? If they are still valid, there's nothing to change. Even if price pulls back or goes up, if the reasons you got into the trade are still valid, don't change anything. If something changes, just one thing, and you're using that methodology, get out of the trade. Day trading FAQ. So day trading, what changes? People seem to have this idea of day trading as if it's this completely different universe, and I never really saw it that way. Even in my younger years, I just saw it as a faster version of what we do with swing trading, which in my opinion it very much is. So when day trading, we change nothing about our system except the time frame that we're anchoring and the time frame we are using to steer. We focus more on internals. We focus more on 0 DTE and weekly options. We focus on futures if the signals are directional. Just a couple random points. Don't let a losing intended day trade turn into an unintended swing trade. So if you ever find yourself buying like Friday calls for a move in NVIDIA and the move doesn't happen, and it's, let's say, Tuesday, and the move was supposed to happen on like a 15-minute chart and it didn't, don't then just say, well, this was supposed to be a 15-minute move, day trade. It didn't happen. I'll just keep my trade, right? The reason you got into the trade is no longer valid. Don't let that day trade turn into an unintended swing trade. LMT applies to day trading even more. You have to be very precise when you're day trading. There's a reason I always focus on this as saying that it's expert level stuff. Everyone wants to do it. Everyone likes fast money. I get it. But here's that sentence again from earlier, and there's a reason that I capitalize this, and I always try to focus on it, because you have to earn your speed. If you have not earned your speed and you're continuously doing the same thing over and over again, you're going to get not good results. The way to adjust is, if you're trying to day trade and you are doing it unsuccessfully, the best thing that you can do for yourself is to see if you can fill in the blank. If you're day trading or you're doing it unsuccessfully, the best thing that you can do for yourself is to increase your time frame. The lower the time frame, the lower the noise. The lower the time frame, the more difficult the chart. Go up a time frame. Work on that time frame. Prove to yourself that you can trade it. Once you've earned that, then you can drop time. Then you can drop to a lower time frame. This is the chart from earlier. I don't want to explain it all that much because I cover this all the time. I think it's self-explanatory. I wanted to include this here. I didn't know where to put it, so I put it in the day trading section because this is a pattern that happens all of the time nowadays. It used to happen maybe 2-3 times a week. Now it happens 2-3 times every hour, slightly exaggerating, 2 or 3 times a day. Be very aware of this pattern. It's the number one pattern I think you need to know. It's a very simple pattern. Study up on it. Let's move on to strategy selection. We're going to be covering option strategies here. This, again, is not the focus of the class. I just want to touch on all this stuff so that you can, again, get your beak wet, understand things that maybe you weren't aware of, and then you can branch out afterwards and maybe learn a little bit more about this stuff. So what are some trade strategies for alignment? So alignment basically means you have like a max bull or a bull chart and a squeeze. So for those situations, those are aggressive situations. Those situations warrant more aggression and more size. And the strategies for doing that would be buying calls or puts, typically delta 70. You can do at the money delta 50. Buying debit spreads, wide out of the money butterflies, I think work fine for that. Prioritizing high deltas is less important to maintain than maintaining positive theta. So what does that mean? It means that if you have a max bull chart and you have a squeeze, the focus should be on getting the most amount of deltas, meaning the most amount of directional input than that, as opposed to theta. So meaning that if you have a very aggressive setup, max bull plus squeeze, go with calls or call debit spreads as opposed to put credit spreads or butterflies, that are at the money or something. So what are some strategies for neutral alignment? So neutral alignment is when things are messy, essentially. And what are the strategies for this? So when things are messy, right, gray candles or green, gray, maybe a little bit of red and then gray again, right? You know those charts, those messy charts. Honestly, you probably should avoid them. But if you're inclined to trade them, then you would just trade them differently. And in this instance, you trade them with credit spreads, which is, the bread and butter of most people. You could do butterflies, iron condors, unbalanced butterflies, ratio spreads. In this instance, you don't want to prioritize delta, meaning direction. You want to prioritize theta, meaning time input. So you just shift it a little bit. Fortunately, the indicators basically tell you what to do. This slide is an old slide. This is back when we actually used to have it. In fact, I was a little sloppy on it because it is an old slide. I have the old name of the indicator here. But essentially the idea is the same. And what's great about this now is that all this stuff that used to apply to the old indicator, it's all built in. You don't have to actually do any of it. Really, the only thing you have to ask yourself, let's simplify this. Let's make it simple. Is it max bull plus squeeze? In that instance, calls and call debit spreads. Is it gray? In that instance, credit spreads, butterflies, condors, unbalanced butterflies, ratio spreads, with the understanding these are a bit more advanced. So my favorite strategies are these. I kind of already covered it, again, with the front running. It never ends. So we'll skip past this one because I already kind of covered it. I'll leave it up for a second. You can read it. All right. So position sizing for most accounts. So this is a very personal thing in terms of there's no right or wrong answer. There's good math that gets you to a generally right answer, and that's what I'm going to give you here. But I've seen John risk 25% of his account. I mean, I would imagine Henry's probably seen him risk more than that. But I know for sure that I've seen him risk 25% of his account, and that's also the trade that he's now most known for. Was what was it, like a $5 million Google trade? So even the pros know when to break the rules. But here's the thing. The pros know when to break the rules. If you have not earned the right to do that, then you need to follow this strategy here. John has earned the right to break the rules, right? Most of us have not. So in general, common sizing that is appropriate for most accounts is about 2 to 5%, and 5 could be on the high end, so be aware of that. So 2, closer to 2, but up to 5% of NLV per trade. And the way you do this is actually very simple. Think of your account as units, so kind of going to a gambling mentality. If you have a $100,000 account, then 1 unit is $1,000. So you are allowed to risk 2 to 5 units per trade. And you just figure out what your unit is. It's usually 1% of your account. Now, there is a point here that I want to talk about, and this is just something that you're going to have to decide. I'll make my case, and then you can argue with me later. And that is, do you prefer to bet flat bets? Meaning you're going to sit down at the table, every setup that comes your way, you're betting 2%, 2%, 2%. Okay? That's one way to do it. The other way to do it is to scale your bets. And essentially you're saying, okay, this setup is better than this setup. They're both tradable. I'm going to bet 2% on this setup because let's say it's a 85% bull, and I'm going to bet 5% on the max bull, right? So you're betting 2% on the bull or the lower quality, yet still bullish setup, and you're betting 5% on the max bull, higher quality setup. Only you can decide what makes you comfortable there. I personally am a fan of the scaled bets because I have an understanding of how math works. So I've yet to be convinced that flat bets is the way to go just because I haven't seen massively successful traders that do that. The massively successful traders that I've known or have read about all do scaled bets. I don't want to influence you, however. Really, it comes down to what you do best. And I imagine there's traders out there that do flat bets that do just fine. You're up to your personality. The reason I'm spending some time on it is because I want you to think about it. I want you to think you'll land in one of these two categories. Are you a flat bet person? Every setup that is tradable, you're betting 1-2%. Or are you scaling your bets? And that's more of a John strategy where you say, okay, this is a stronger hand that I'm holding. I'm going to bet more than the previous. Pre-trade checklist. So index sector and stock. So be aware that, of this dynamic index sector and stock. Always look at the index first, then the sector, then the stock. It's just going to give you more edge. In total, this trading game, it's all about stacking very, very tiny edges together, right? You might get maybe 0.5% of edge by doing this. But Vegas was built, all those really big buildings in Vegas were built with tiny edges stacked up over a long time. So that's your job as a trader, is to find these tiny edges. This one will give you a ton of edge, index, sector, and stock over time. So using the scanners. So I did a big thing yesterday on the scanner in the install session. So I do want to speed this section up a little bit. I also want to put this out there and let the chips fall where they may on this one. I'm not a fan of scans, or let me put it this way. I'm not someone that uses a lot of scans, right? I have this as my primary scan now. And again, just a collective shout of gratitude from the class to AJ, who put this together. So you will rarely see me looking at scans from now on, because this is beyond any scan that I could ever build. Look at this. Look at this. This is insane. Every major stock I could think of is here. Every score, dynamically updating. Every squeeze, updates every 5 minutes. Doing this on a scan would take me ages. Okay, so I tell you this because I'm about to go through the scans, but understand that I am not I'll say it straight up. I don't care about scans. So I'm doing this for you guys because some of you will care. But here's kind of the barbell. One, make sure that you have the latest the latest bull scan link. Mirza could drop it in the chat. I think your class folder's been updated with it. So what I am going to do is actually show you the one scan that I do run, that I do like. But let me say this: with the scan that comes with the class, the indicator, there's 2 scans that come with the class. You can build anything with that, but let's not go down the road of how do I build this and how do I build that and how do I build this and how do I build that, because that's an infinitely deep road. So again, I just want to say that because folks are the Pandora's box of scanning is infinitely deep, and I'm not going to open it. So that's kind of where I want to start with that. But I will touch it. I will cover it. So these are the 2 methods that I use for scanning. This is an updated scan that we published yesterday. So this will overwrite your bull scan. So this is the one that I'm going to show you here in just a second. I also did this yesterday, so you can catch that one, but I'll do it very quick. I want to make sure that we can get out of here at a reasonable time. And so I am trying to hurry this part because I personally do not find a ton of value on this element. This is going to be a lot of self-guided stuff on scans. Most of you will not be going through the process of scanning this deeply. And so I'm not all that concerned about it, but I want to spend more time on things that I think is higher value. So let's do this real quick. So there's that, and there's this. So for now, you guys have the manual score sheet. And I hope at least one of you filled it out. Did anyone fill it out? Has anyone filled out any of this coming into today? Yeah, you don't have to fill all of it out. So yeah, let's touch base on this. I'm just going to kind of like roll through this. So this is all basic stuff. I feel like I've over-explained a lot of stuff that I feel like maybe needed to be over-explained because it's like the really nerdy indicator stuff, and that's what the class is. This stuff is just hopefully very easy. So excuse me if I just go really fast. I'm going to assume you can type in numbers into a sheet. So I'm just going to blast through all of this. So let's start with this. This is something that I shared with you guys. The number one thing when you get this is super long, right? The number one thing that when you get this, make this your own, okay? So the first thing that I would do is if I were someone that only cared about the top indexes. Let's say I only care about SPY and QQQ. I don't care about anything else. Boom. Okay, sectors. I only care about, let's just random. It doesn't really matter. Let's just say I just don't care about any of those. I'm deleting that. Let's say I don't care about any of these. Deleting that. Only you know what you care about. In terms of top stocks, same thing. The bonds and miscellaneous, really, in most cases, here's what I would keep if I were you, unless you're just a total geek like me. HYG, I would keep. AD, JPY, AD, Aussie yen, I would keep. Dollar, I would keep. And ZN, I would keep. VIX, I would keep. Everything else can go. Commodities, really, unless you care about gold, copper, or any of this, just don't even fill it out. Right? I tell you this because if you have to look at this sheet and it's massive and it's overwhelming, guess what's going to happen? You're not going to do it. Or you're going to do it once and say, the next time you're going to say, oh, it's massive and overwhelming, I'm not going to do it. So make it your own, shrink it down, right? Once you've made it your own, then what I'd like for you to do is just go through and fill it out. Now, here's kind of the thing. Members who's a lot smarter than me, he took the indicators and he automated it. So this is waiting in the wings, right? But in the same way that when you went to school and you complained to the teacher that, why do I have to learn math when I have a calculator? And they're like, well, what if you don't have your calculator? Learn the math. I highly encourage you to do this one time, at least, before we release this. At some point in the hopefully very near future, you will not ever have to do this again. So that should be that. Hopefully, that got a sigh of relief from one of you. And can we get some hearts in the chat for AJ? Seriously, this is amazing work, guys. Yeah, let's give a little bit of love here for AJ here. Yeah, thank you so much, man. This is incredible work because keep in mind, not only is it filled out automatically, it updates every 5 minutes. So as you're trading, boom, this thing's moving up, this thing's moving down, this thing has a squeeze. Fantastic work here. For now, this is what you have. Fill it out at least once, even though I teased you that this is coming later. Just do it once. Trust me on this process. Get this mind-body connection going with the indicators. It'll connect you to them. You'll start to understand them, and then once it's automatic, you'll be able to breathe a sigh of relief. So what do you do here? Really, it's very simple. Very, very simple. All we're doing is just typing in scores. So all you do is load up your charts. What score is the weekly? Let's just say it's 100. What score is the daily? Let's say it's 100. What score is the 4 hour? Let's say it's 50. What score is the hourly? Let's say it's negative 80. What score is the 30 minute? Let's say it's negative 50. That's your score, right? And that's what it ends up being like. And if you just make this your own and delete everything you don't want, it's very fast, and then two, it very, very quickly tells you where to focus. Okay. So I spent some time on this because the preparation is the thing that makes me ready to trade, right? I find that if I'm not totally prepared, and the preparation having happened beforehand, that the hesitation to get into a trade is higher. So the confidence matters, and this gives me confidence. So fill it out at least once or twice, and then hopefully we'll have this on the back end ready by the time that that fires. So that's that. I just want to touch on this one as well. So these are my weekly notes. I do try to share them in the room, in the Mastering the Trade room. I just want to show you what I look at. So I'm looking at Forex Factory / calendar. I'm making a list of the best stocks, right? And that's obviously being taken care of by the checklist. I got this CTA report. You don't need this, but I had Claude code this. I think it's pretty cool and pretty helpful. You don't need it. Here's me walking the walk and filling this out the hard way, the grunt way, before AJ automated it. You don't need to be this deep, but I highly encourage you to spend some time on this after this class. If not, let's have fun after this class. Actually, don't even think about indicators after this class. Go have yourself a drink, enjoy your life. You guys have some beautiful lives. You have some beautiful spouses, some beautiful kids. Go spend some time with them after this class. But tomorrow morning, fill out that sheet. Give me 30 minutes of your time. Fill out that sheet, and it'll be worth it. But here's my sheet, and this is an old one. So just proving that I walk the walk. Twitter / eWhispers is where I get my earnings. I have the Trader's Almanac here, and I have seasonality. So for those of you that are going to be doing the live trading, I'll just give you my notes. For those of you in the Mastering the Trade room, I just give you my notes. But if you're this nerdy, you can go through and do it yourself. Alrighty, so that was that one. Now, where were we? Where did my presentation go? There it is. Okay, so now we have to look at the scan. So I shared one scan with you, and it is really the only scan I really use is that one. But I want to caveat it and tell you that you can build any scan you want. Think of it this way. The scan files that I've shared with you, it's kind of like those boxes of colors, like the Crayola colors that come with like 64 colors. Like you can use those 64 colors to make a picture of anything, right? So it's like if I were to spend time saying, okay, draw me a zebra, Sam. Okay, here's a zebra. Okay, now draw me a squirrel. Okay, here's a squirrel. Okay, draw me a tree. It's an infinite rabbit hole. So what I'd like to do instead is just say, let me show you what I really use, which is this. And then you have the ingredients to build anything else that you want that's different. So this is what the Max Bull scan will look like. Ensure that you're using the one that I recently shared, but it should look like this when you load it up. I'm going to spend just a bit of time on it, not too much. Feel free to change anything up here, right? Like if you're looking for like smaller market cap stocks, my minimum is 10 billion. Yours might be, you might not even care. So change that if you wish. My minimum price to trigger anything is $20 on the stock. Some of you don't care. Some of you trade penny stocks or whatever. You can change that too. Everything else here I would probably keep, right? Because everything else here is kind of well defined. The scan is shared with a squeeze parameter. So feel free to, change that or remove it. You don't necessarily need it, but out of the box it comes with a squeeze built-in parameter as well. So it's looking for, essentially, let's verbalize what this is looking for. What this is looking for is max or bullish setups with squeezes, right? So let's just run it, see what happens. Okay, so this is going to be the things that come up here. And again, what I'd like to do is actually just compare these to this. So this is, AJ's automatic sheet. I think this is pretty self-explanatory, guys. So what I really want to leave time for, a lot of time for, is the charts. So let's go ahead and move forward with this. I think all of that's self-explanatory. Anything that's not self-explanatory when it comes to the scans, contact our support team. CC me on it so I get a chance to see it. If you have questions about the weekly score sheet, or you want me to check your work, how many of you are brave enough to send me your score sheet and your work? Let's see. Sam@simplertrading.com if you do it. I'll check it out. So there's that. Let's go to the miscellaneous. Seasonality, be aware of seasonality. We covered all of this. Stocks have the tendencies. This is the tendencies. Be aware that you're trying to line it up. Nothing is perfect, but it generally follows that tendency over a long period of time. Witching weeks, be aware of this. Also, make sure that you're staying around to the end because we're getting to the good parts. This is not the time to drop off. Witching weeks, again, be aware of this. This kind of looks like a woman version of Powell, by the way. We don't need to spend a ton of time on this. Just be aware. March, June, September, December, third Friday expiration, witching weeks, they can be a little funky. The Fed, obviously be aware of what the Fed is doing, and the motto is don't fight the Fed. So fortunately, the Fed right now is pretty quiet with most things. Here's a key slide. Make this your own. So today you were given powerful tools and an instruction manual on how to use them. Make them your own. Make them whatever colors you want. Everything, as long as you don't change the integral data that goes into it, it can be, you can make it look any way you want. Your arrows can be pink for all I care. This is an example from my friend. This is one of the most god-awful things I've ever seen in my life. It looks like a Barney abomination, and he likes it. I hate it. He likes it. Whatever. It's the same indicator. So make it your own, right? Make it completely your own. Make sure it resonates with you. It's the key thing. Make sure it resonates with you. Here's some notes that I keep on my desk or taped to my monitor. I probably need a nicer way to do this. Find a way to do something like this so that your signal is always in front of you. So I keep it on my monitor. I like this one, fully focused or fully flat. That's a big one. If you find yourself that you're not fully focused, that meaning that your mind is somewhere else, right? We're all human. Even as you sit here and you're listening to me, how many of you are thinking about something else? Let's do a little bit of internal audit here. You're sitting here right now thinking about me. One, how many of you thinking about what you're going to have for dinner? What you're going to be doing later? That thing that your wife said? Your kids? God forbid, it's something that happened 20 years ago, that the time that you were supposed to go out with the girl in college and you didn't. Just random things, because your mind is a monkey, right? It's a monkey. It's always chattering away. Even as you're sitting here, you're listening to me. You're trying to hold your attention on me. Somewhere in the back of your mind, you're thinking something else, right? So if that is the case, and it becomes to a point where it might be affecting your trading, fully focused or fully flat. So here's where it gets interesting. So I'm gonna take a big sip of water because we're about to get this is where I shine. This is my fun time. So bear with me for a second. I'm gonna take a big swig of water, make sure my throat is good. I'm a little parched, and I'll be right back with you. Sully says she was hot and is now rich. The college girl that you missed out on. I think about mine all the time too. There was this beautiful blonde that moved in next to me, just absolutely smoking. And I don't even remember. Somehow I got into her circle and like we became like not friends, but like we just started like chatting. And so I took her our first date. I took her to. It was actually an amazing first date. I took her to see the Led Zeppelin symphony. So there was a symphony in town that plays nothing but music from Led Zeppelin. And I was like, well, that's cool. So we went there and we have a good time. We go out to 6th Street, which is the bar street in Austin. We're drinking, we're having a good time. We're on the dance floor, first date, and they're playing Lady Gaga. I think the song's Love Game by Lady Gaga. And one of the lyrics is, "Don't think too much, just bust that stick. I want to take a ride on your disco stick." So the lyric says, "I want to take a ride on your disco stick." And every time that the hook plays that says, "I want to take a ride on your disco stick," she pushes her finger into my chest. And in the moment, I'm thinking, man, she really loves this song. It wasn't until years later that I realized that was a sign. And as a 40-year-old man, I still think about that. The monkey in the mind will chatter with the most random nonsense, so you have to cage it. So let's dive into some random thoughts. So the value of liquidity. Prioritize liquidity. The consistently lower liquidity equals better spreads and less slippage. It's going to be easier to exit. Always have an idea of where volatility is positioned. Remind me maybe at some point to give you guys my IV label before we head out. I'll put it in the room drive. Premium sellers usually win. Really important, open candle, open indicator. Turn off extended hours for equities and leave them on for futures. We're going to get to the psychology part here in just a second. This is not the time to drop off, by the way. Most powerful time frames are those time frames. This is a new sentence thanks to one of my friends who was asking me about switching strategies minutes before the webinar. She was like, "What do you think about this strategy or that strategy?" So I decided to include this point, and it says, "Do not be promiscuous with your strategy." Why would I say it like that? Don't be promiscuous with your strategies. Stick with a strategy, right? If you find yourself that you're constantly chasing the next laser, ooh, shiny thing, ooh, big number, you will never get anywhere. If you find yourself that you're a tourist, meaning that you are in the mastering the trade room, and then I have a bad trade, because I'm the only one that ever has bad trades in there. Everybody else wins. I have a bad trade. You lose. You say, "This room sucks. I'm going to go somewhere else." You then go to another room. That room has a bad trade. "This room sucks. I'm going to go somewhere else." You will never find a home, nor will you ever grow. So what I mean by do not be promiscuous with your strategies is focus in. Give them time to work. This is new for you. This indicator is brand new for you. Work with it for some time. Only after some time, if it's not working for you, change your strategy, but don't bounce around. Speak in the common tongue. What does that mean? When you speak in terms of scores, structure, and levels, not ideas. Someone on Friday mentioned that higher interest rates would hurt the Russell more than the other indexes. How many of you would agree with that? Probably so, right? Russell has a bunch of garbage companies that are, mostly indebted. So higher rates hurts the Russell more. So what they said was factually true, and I agreed with it, right? But then as it hit my brain, I thought, well, that's not really a common tongue if we're talking technically, right? Higher rates will hit the Russell more. Technically true, but prove it. Okay, what's the common tongue? Well, now it's the indicators. So let's see if the Russell actually is in worse shape than its big brother, the NASDAQ, or the S&P. And it is. So in that instance, you see how now we've married two ideas. We've married two things. We married the correct factual statement, higher rates hurts the Russell most, with a technical signal. Then you have something. That's a big deal. Ideas are a dime a dozen. Can you tie it together with a technical signal? Here's another one. This is big. I can thank the room from last week for all of these. Don't try to explain the market. The only explanation needed is it is what it is. The funny thing is, when I started trading, if you told me that it was like, okay, explain why that happened or why did that happen, and somebody, let's say I had a mentor, and they said it is what it is, I would have been so annoyed. I was like, what kind of bullshit mentor are you? It is what it is? That's nonsense. And then I would go on a path of discovery to discover what's really driving it. I would find shadows and nothing. And guess what happens? I come full circle right back to where it started. And the explanation is it is what it is. It's a funny thing, guys. We always try to explain the market. Oh, it's going up because of this. It's going up because of that. Here's the thing. Price happens first, and then we tell ourselves a story to justify it. That's the reality of the dynamic. Our mind thinks it's going up because of the story, and in reality, we're creating the story because it's going up. Don't try to explain it. It is what it is. More random thoughts. Remember that stocks are priced in dollars. Dollars lose value, and therefore it's going to take more dollars to buy things. So therefore, stocks naturally have an upward drift because of unit dollar depreciation. If nothing else changes and just the dollar goes lower, stock prices go higher. It's a built-in cheat code, essentially, for stock prices. The second point, the game is rigged. Fed, politics, dollar, everything's too big to fail. Making money, I love this one, making money as a bear is so rare, they made a whole movie about it. Did that get a laugh from at least one of you? Making money as a bear is so rare, they made a whole movie about it. So lean bullish into the rig, right? I phrase this provocatively on purpose because I could have said manipulated, rigged, whatever it is. But here's the thing: it doesn't matter. If you're going to say that the market's rigged or manipulated, go with it. You know, you don't have to fight it. Go with it. Make money. Your job's to make money, not to, you know, yell at the market. So understand that it is rigged by design in an incredibly heavy way. Lean into that. And this is this little segue here is for my perma bears out there. You're fighting powerful forces beyond logic. So don't be a perma bear. Be able to explain every pixel on your screen. So one little bit of homework for you tomorrow as you go through and you set things up, make sure you can explain everything on your screen. Prioritize liquidity and high activity stocks because illiquid instruments will move more erratically. This is important because it's going to affect your indicators. The more liquid it is, the more reliable the signals will become. 1 million people is easier to read than 10 people. It's paradoxical, but it's true. You will find more success by focusing on a handful of stocks and learning their personality than trading everything that pops up on a scan. Additional resources. We're almost getting to the good part. Books to read. There's this guy I know named John Carter. I actually I broke into his office and stole some art from him. You might have heard the story. Mark Douglas for trading psychology, John Murphy for charts and intermarket, Steve Nyson for anything candlestick, Austrian economics to understand how the world should work, although that's should and is different, but Austrian economics for that, and then Alan Watts just to take care of your brain. Alan Watts tapped into the software of humans. Bookmark some of his stuff on YouTube. And speaking of, the psychology game. Patience is the game. Most of trading is waiting and being patient and waiting for your setup to appear. Most of what you will see during the trading day is noise. That's okay. That's a feature, not a bug. Don't force it. Wait for your signal. Don't try to touch all the water. A part of learning something new that can be exciting at first. How many of you were excited when you got the indicators? I mean, I was excited when I got the spreadsheet, so I would imagine you guys were excited when you got the indicators, right? It's a new thing, right? You get the chance to use them. Some of you are using them very successfully already, even before the class. And it can be exciting. But you don't have to learn everything all at once. In trading, like in many things, one can have great success by finding their niche and just mastering one or two things. As important as I think it is to touch base on the big picture, traders have to be able to remain adaptive in the line of fire. The more things that you're trying to juggle, the less likely that you will stall or not react in the line of fire, right? You could spend your entire life reading about war and shooting guns, but the moment that a bullet whizzes by your helmet, if you freeze, what was it worth? The solution for this is to prune the information, only take what is best and discard the rest. And it's good to get up and take a walk every once in a while. This is another one of those art pieces from John. I probably should have asked for this one too. Maybe after this class I will. Everyone wants to be Cortez. Nobody wants to burn their ships. What does that mean? Sometimes the only way to move forward is to make it the only choice. Are you guys familiar with the story, the Cortez story? Cortez is in Europe. He wants to take land and treasure. And it's very easy to think that. So you get a bunch of men on a boat, you sail them across the Atlantic, you land them somewhere around Mexico, South America, and then things start to get hard. And the men are hungry, and they're tired, and they're cold, they're missing their wife, and they want to go home. They're telling Cortez, let's go. This is uncomfortable. I miss my wife. It's cold. I got bitten by a boar. And so what does Cortez do? He burns the ships. He makes it no choice. There is no way back home. We have to conquer. Trading is difficult and rewarding, but my goal is to give you the tools to succeed. If you have the spirit to burn the ships and be the best version of yourself, then you will succeed. So you guys remember this one from the webinar, but I want you to think about this and make it your own. Don't, as I tell you my story, process it, but ask yourself, what is really going to give me this feeling? Even before, even before I see the slide, I already feel it. And I hope you guys have something like that, something that where you think about it and you have that moment that I just had, where it's like I couldn't even talk. It felt like my heart dropped into my stomach in a good way, because it's like too big. It's too big for my chest. Find something like that, because you need a North Star to guide you during what's going to be a long journey of a trader, right? And you need that North Star that is your constant guide during difficult times. And so the question that I pose to you is, what motivates you more than anything else? And it could be a lot of different things. It could be family, it could be freedom. You could like nice things, right? Taylor wants a brand new BMW, and it's a badass car, and I bet it goes really fast. But whatever it is that motivates you, tap into that. For me, it's always been animals, and my goal is to start Animal Sanctuary with my trading, and I'm going to name it Amanda's House. After the person who helped me embrace trading. So here's an interesting slide. And it starts with a little bit of a story. And we're going to go over on our time, guys. I hope that's okay. Are you guys okay with that? We might go to 5. We might be going another 90 minutes if that's okay with you. Either I rush it or we go over. And it's Saturday. Hopefully you're comfortable. So let's just go for it. So this is the irony of need, and it starts with a story. So when I was whatever age you are when you're in 7th grade, no, it wasn't 7th. Yeah, it was 7th. I was like 11 or 10 years old. I don't know what age that is, or grade. I was like 10 or 11 years old, and I'm walking home from school. And I grew up really poor. My mom never made more than $8 an hour growing up. And I'm walking home from school, and I'm crossing the street, crossing the crosswalk or whatever. And there's this lady handing out flyers, and the flyer says, if you're a kid and you want a job, call this number. So I call the job, or I call the number, and they're like, great, what's your address? We'll come pick you up tomorrow. So the next day I get home from school, a white, unmarked van shows up. And they open it, and there's a bunch of kids in the back, and a big fat bald white guy driving the van, and his wife is next to him. So unmarked white van, very very safe. And it turns out that what they do is they get a bunch of kids from the hood, and they give them totes, like these big rubber totes, Minute Maid or whatever it's called, Rubbermaid totes, and you go knocking door to door and you sell stuff. So he would pick us up every day. He'd take us to different neighborhoods, and every kid would have a street, and then they would walk up and down the street knocking on the doors, and then hopefully sell stuff, and then he would pick us all up and take us home, and we'd get like 10 or 20% of what we sold. So I did that for a while, and it turns out I was pretty good at it. Every day I was making like $75 to $90 a day, which I was making more than my mom at like 10 years old, so put yourself in my shoes on that one. And I started getting a little bit of money, right? And I would never spend it because I'm a kid. I don't have anything to spend it on, so I just save it. And I get home one day, And I'm putting my money away, and I'm putting it, all the fives go here, the tens go here, the 20s go here. And my mom's watching me from across the room, and she's quiet. And then I feel her just looking at me, and I look up, and she's just looking at me. And I go, "Why are you staring at me?" And she goes, "Do you know why you will always do you know why you will always have more than you need?" And a little bit of background on my mom. We've always had an inverse relationship. I'm the parent. I was the parent at that age. I was making more money than her, and I was the parent in a lot of other ways. So we have this flip-flop relationship. So I've never gotten good advice from my mom. It's just the way it is. I love her. She's a great person. She's the nicest person in the world. She'll give you the shirt off her back, truly. And but she's just not someone that's going to give advice because she doesn't have a lot of experience. So this was stuck with me. She said, "Do you know why you'll always have more than you need?" And she said, and then I go, "No." And she goes, "Because you don't need it." And it's true. The reason that things were magnetic to me was because I wasn't trying to hold on. And so the point of this is that the more that you need something, the more you will find that it will run away from you. The more that you chase after it, the faster it will run away. So the way that you resolve this, and we've all experienced this, you all have experienced this in your life, where it's almost like, I don't want to say the word desperation, but that captures the essence. You're just trying too hard, and it's like water in your hands, and you're squeezing it. And you're trying to hold the water in your hands, and you're so afraid it's going to go somewhere that you squeeze it. And then what happens when you squeeze it? Then it goes somewhere. The very act of trying to hold it creates the release of it. The way you fix that is you slow down, you remove the need, and then it will come to you. Also, I really love this little dollar sign running away. Closing thoughts. Go slow with new ideas. Allow for the strategy and the indicators to prove themselves to you first with smaller trades before letting loose. Find time to fiercely focus. Find joy in disconnecting. After this is over, disconnect. Let it go. All of this will keep working in your subconscious. You don't need to study anymore today. You've studied enough today. It's been a 5-hour class. It's going to be a 5-hour class. This is enough. Go have some fun after this. Find joy in disconnecting. The stock market is the greatest psychologist on earth. You cannot lie to it. Trading will reveal who you really are to yourself. It's not you against the market, because the market doesn't even know you exist. It's you against you. Remember to take care of your body as well as your mind. We are all here because we're type A personalities, and what we do is very mental, but it is a circular thing with your body. So stretch, lift, move things, stay physically healthy so your mind and body connection remains strong. Ask yourself, what is really your goal? Is it to be right or to make money? If it's to make money, then follow the things that we've talked about in terms of speaking the common tongue, not forcing your opinions, letting go of your belief systems and all of this stories that we tell ourselves. Remember, if your goal is to make money, the best sentence that you can say is, "It is what it is." In trading, your mind is your tool and your weapon. Keep it sharp. A disciplined mind, a trading edge, and risk management will lead to success. And lastly, let go. Going back to the original point of this entire endeavor, the secondary point was the indicators. The first part was to remind you to let go. You're not in control, and it was never yours to hold on to. So let go. And then lastly, in a weird way, the market gives its participants exactly what they want. Said by a young, handsome philosopher named John Carter. The best quote I ever heard was said by a homeless man, and I would like to share it with you. Life, what a gift. How lucky you got in. A man who had nothing but gratitude for life is something that I never forgot. I actually have it written down. It's an ancient postcard. It's probably 30 years old, no, 20 years old now. Life, what a gift. How lucky you got in. The improbability of it all. As traders, it is easy to get caught up in our own experiences and the noise of the world. One of the strongest methods I have found to counter this noisy energy is to overwhelm it with a stronger energy, which is most often gratitude. I find that I can easily get to that place by remembering one thing: the sheer improbability of this very moment. Now, whatever you believe, the probability that you and I would be having this moment together, connected by silicon and electrons, is incredible. The probability of that any of this exists at all, even when it seems bad, is amazing, and the idea overwhelms me in times of stress in a very positive light. At some point billions of years ago, every atom in you and every atom in me and every atom that exists and will ever exist was one. Whatever this is, it's bigger than us. So this is the very last slide, and then we're going to go into some chart work here, because I think that's the most important part, and I want to spend a good chunk of time on that, or at least the remaining time that we have together. So thanks for spending your afternoon with me. It's not over yet. We're going to do a Q&A, we're going to do charts. I hope that everything that we have covered, from the indicators to the strategies, will help you become a better and more profitable trader for the long run. I'm happy to be a small part of your growth as a trader, and if you need anything from me, shoot me an email. I'll see all of you in the live trading. It says have a great rest of your day, but we're not done yet. So let's do some Q&A, right? You guys must have some good questions, so let's get through those, and then we'll do maybe a bit of chart work. How to use the Squeeze Ultra with the TMS. So I'm just going to start from the 342 comment. So anything asked before that, just copy and paste it again. I'm going to start with Lon's comment here. How do you use the Squeeze Ultra with the TMS system? So nothing really changes. I would say that if the Squeeze Ultra is saying that it's an ideal squeeze, and then you have a bullish alignment on the indicator, that is an additional confirmation. In the event that it does not say it's an ideal squeeze, I always prioritize our indicators. So if Squeeze Ultra is aligned, even better. If it's not aligned, I always go with mine. Steve with the raspberries. What's the candle color logic again? So that is the same as I showed you in the slides. So it is actually in the presentation. Just go back to that part of it. 95 and higher is going to be dark green. 75 to 94 is going to be regular green, bright green. 74 to 45 is going to be blue or neutral up. I'm doing these from memory, but they are in the slides. Does the indicator show differently between SPY or SPX? It may, just because they're going to be different data, right? So they're going to be slightly different data, despite the fact that they're roughly tracking the same product. Look at Microsoft 15-minute. We had on the last sell bar, so that may leave Monday until 4 bars close. I don't think so. We can start looking at charts here. Let's do it. Let's do it this way. No, actually, the repainting issue is, I don't really find that to be that much of an issue, guys. I really don't. Just because, one, I'm aware of it, so I know the windows that it works on, and then two, this idea of like I'm going to catch the. So let's go back to this example, because it's a current one, and it's actually a perfect one. So this trigger on SanDisk. Let's break this down. How did this happen? Okay, so These two signals are completely clean and there's no issue there and they will never repaint. This one, as we talked about, did not actually trigger until this bar here, right? Because the pullback collapsed the true momentum. It triggered a sell here, but in reality, you can actually ignore this. This actually has no input into this conversation. Really what happened is on this bar right here, the true momentum collapsed onto itself. Let me explain what I mean by that. You see how it is now negative? That happened on this bar here. So because it works on the window, it's a 5-day window because it's a weekly look back. It then retroactively prints it here, right? Here's the thing. Some might say, well, I want it to print exactly on the bar. The only reason that this indicator is so good is because it's referencing the higher time frame. So I don't have a way to adjust that. It's just something that I recognize and I deal with. But let me actually really just say what I want to say. This idea that you're going to nail this at 1600 or any instrument to the absolute nut high is so amateur hour, it makes me want to pour another shot. It's just not the way trading works, and it's amateur hour. I'm not trying to call anyone out. I'm not, because I don't know any names, but it's amateur hour. Here's what trading really is. Trading is, you'll have the topping process, you'll have the bottoming process. This will be like 10% of the game. This is 10% of the game. And your job as a trader is to catch this, right? 80%. So this idea that like you would expect something that triggers at the absolute high to the penny, or let me rephrase it, whether it triggers at the absolute high to the penny or whether it triggers 3 bars later and then causes an 80% of the move, that's irrelevant to me, right? As a trader who has experience, I understand that the game is in the middle, right? So the idea that, let's say that this is a lasting top. Let's just play it out, right? Like, let's just say that this is as high as SanDisk will ever get, and then every bar from here is just going to look like that after it has a sell signal. Where would the entry be? The entry would have triggered on this bar here, right? It would have lit up on your system that that's a sell. Okay, let's say that that's the high from all time, right? Am I going to be upset that I didn't catch this when I'm catching this? Let me give you another example real quick. AMD. AMD is not a great example. That's actually too clean. Intel's not a good example. That's too clean. Let me think of one that's clean. Microsoft might be a good one. Okay, let's use this example. Okay, this is kind of a SanDisk-ish example. So, looks like it nailed the absolute high there, right? What really happened? Where did this really trigger? This triggered on the collapse of the lines. So this sell that retroactively triggered is probably triggering here. Okay? So let's really think about this for a second, right? Let's be professionals, because the ones of you that have lasted this long, let's be professionals here in terms of what is really our goal. Okay, so this says sell here, but it really, the sell happened, or the sell triggered here on this bar, and then because it's a 5-bar window, because the weekly bar is not closed, then it would have printed here, right? But in reality, you would not have seen a signal to sell until probably this bar here, right? Okay, now that we understand that, and that roughly is going to be around 458. Okay, so let's keep that number in mind. If you had shorted the absolute high of this candle, it's 467. Let's say 460. Let's just say 467 and 458. Okay, what was the end result of that? Oh no, I'm 2 bars late. Well, it doesn't matter. Look, if it triggers here, or if it triggers here, the end result is that. So I'm not going to be too concerned. I'm not going to change the entire indicator for that when the payoff is that. You get what I'm saying? So just I just wanted to go back to that point because I want to be really clear as to yes, that is a thing that it does, but it is just the limitation of the indicator because it has a look back period of a higher time frame, right? If I had it on the same time frame, I could do that, but it's just going to be incredibly noisy and it would not be anywhere near as accurate. So just a point there on that one. Actually, you got me on that one because you brought up Microsoft. So let's take a look. I was already on Microsoft, fortunately, so I'll just change the time frame. 15 minutes. We had a 15-minute sell on the last bar. Okay, so will this reverse? No, this will not reverse. This is locked in place. Now, what can happen is this will not reverse no matter what. But what can happen is that, let's say Microsoft gaps up. Let's say something nutty happens and it gaps up, right? So then you'll have a sell signal, but then it gaps up on Monday. That will then trigger a buy. Okay? But that's not the expectation. The expectation that I would have going into this, into next week, is that Microsoft is going into next week as a sell. But understand, this bar is locked at this point because all bars have locked. There's no there's no higher time frame to reference at this point, right? Does that make sense? Like the 15 minute is not referencing the weekly time frame. The 15 minutes referencing the hourly time frame. The hourly bar has closed. This signal is locked. No matter what happens, whether Microsoft does this and the signal looks like a genius, or whether it does this and gets bought out by Apple for $50 trillion and the signal looks stupid, it doesn't matter what it does next. It actually is locked. However, as someone who is using these indicators, I would understand, I would have to view this as the probability that the continuation will be lower. There's no way I can look at that otherwise. So I see that signal. I'm not even doubting it. You know what I mean? Like, I would just go with it because that's the current signal. And if it's wrong, guess what? It's trading, right? Probabilities, that signal, the totality of my signals are going to be correct much more than they're going to be wrong. You have to accept that trading is probabilities. And I know you know this. I mean, I know you're in the MTT, but I'm just saying it for the folks out there that are like, I want to catch every single low and every single high, and I never want to take any risk. You'd be surprised how some people think. So I just have to say it. If you're playing a daily time frame, do I need to wait a week before it's confirmed? Give me a chart that you're looking at so that we can speak the common tongue. Yeah, that's probably the best way to do this is give me the chart that you're looking at so that I can look at it with you, and then we can, because I don't want to talk in abstractions. So give me charts, and I'll come back to you, but give me a chart and I'll see it. MU has pulled back from the fourth ATR to the second ATR. What lower time frame would you look to buy a signal? Oh man. All right, so that's a complicated one, but let's take a look real quick. Okay, so there's ways to open this up. Don't post in the chat because I don't want to clutter the chat with things that are not questions. But a 75 bull, where is this going to trigger? Is this going to trigger a buy here or here? It's going to trigger a buy at the 21. Okay. Now, let's say, for example, that you think that maybe you can go inside of this and finesse it a little bit more. Okay, fair enough. I wouldn't be looking, the correct place to buy this, barring something changing, is the 20. That's where it's going to trigger the buy. But let's say you wanted to finesse it. This kind of goes into the multiple time frame analysis stuff. Okay, well, if I wanted to finesse it, how would I do that? I would wait for an hourly arrow to turn. Basically, this. So, MU on the daily has an uptrend. Here on the hourly, it had a down arrow. That down arrow went nowhere. It basically was sideways, and then it gave you an immediate up signal yet again. That's your trigger. So exactly this. So notice the similarities. Let's say on Monday, it gives an up arrow right away. I mean, probably will in this market. Then that's your signal to get in. However, I wouldn't approach it that way. I would approach it as right now you need that up arrow, and the path is lower until you get it. And then I would look much more closely near the 21. My arrows on the chart don't look like your arrows. Yeah, that was a limitation, so thanks for bringing that up. That was a limitation on export. So when I export these arrows, no matter what machine I do it from, TOS cannot handle special characters. And I had to use different characters for your arrows. At the end of the day, they mean the same. They will be in the exact same place, but that was a limitation in terms of how I could export it. Bear scan, bull scan, lower time frame. I don't know what that means. If you can maybe expand. Just to be clear, the bar colors are delayed based on the higher time frame interval, like buy or sell bubbles are. I think you guys might be overcomplicating it a little bit. I don't know if I don't know if how well of a job I did on that, but this idea that everything is delayed is completely incorrect. Here's the way it works. And it's very important to understand this. I will go back and explain this. This idea that everything's delayed is not correct. The only time that you'll get any type of weirdness like that is if you get a later stage change in price. So let me go back to the SanDisk analogy or SanDisk example. So here on SanDisk, chances are, this is a Monday bar, this is a Friday bar. Chances are that this bar that did absolutely nothing, it was basically like a slightly up bar with not a big range necessarily, didn't change the indicator, right? It's not changing the structure. The moving averages are not going to change from a tiny bar. This was clearly not changing yet, right? And therefore, I would very much guess that the true momentum was still completely fine on that bar. It wasn't until one of these three bars, and I don't know which one because I wasn't watching this live, but I'm just using this as an example, that the pullback happens, that then this causes this to collapse. Once this collapses, what do you guys know about this? This is the most important indicator. Therefore, this entire thing goes gray, right? In reality, I think that it's one of those things that you just have to use, right? Because I don't know if I've done a great job of explaining how it all works, because if there's a belief out there that like these types will reprint, that's not the case. The only time that they will reprint is when the true momentum lines rapidly collapse onto themselves. So maybe that's the way I should have said it earlier. The only way that this will reprint, let me be very specific and bold here. The only way that anything will reprint is if all of a sudden the true momentum lines collapse onto themselves, right? Rapidly. If they do not do that, then there will be no reprinting. But if they do that, then the look back period of the true momentum is what comes into play. Please explain your methods for adding to a trade if it pulls back and gives you a secondary input to get into. So let's see, has AMD done that? No. Did Intel ever do that? Intel gave one buy signal and never another one. I'm trying to think of another one here. Maybe QQQ. Man, everything's so strong, it's hard to find something that's like giving multiple entries. Let's just use this example. So, adding to a trade, as long as it still meets your trade parameters and you're still within your risk tolerance, every time that it pulls into a buy zone, it's going to re-trigger a buy. So any one of these, any of those would be opportunities to add to the trade. Now, I wouldn't necessarily view it as, every arrow is a must add. That comes up to you. But essentially, if you really understand it deeply, the arrows and the bubbles are doing so much of the work. Let me actually change this back to buy and sell, because they've already factored in where you should be buying and the score necessary to buy where. So there's really no necessarily much of a thought process anymore. If you're looking to add, you can always add on the next buy bubble, but with the caveat that you do not necessarily have to add. Hopefully that makes sense. So this is such a funny question. So have you stress tested these indicators to know they are accurate? What percentage of accuracy? How do I say this? Your accuracy is going to depend on your own. Let me pull up like the cues. So I don't know. You tell me. I mean, I think it's all there for you. All the work is on the chart. Even if you ignore, let me put it like this. Let me come put the ball back in your court. Ignore these. Ignore those. All white signals. Ignore them, and then just look at the trend continuation signals, and you tell me. How many bars after a bubble signal do you feel the signal is still valid? Is it something like the squeeze where it's 8 to 10 bars? No, I mean, it's indefinitely valid until the next signal happens. So let me expand my... I'm trying to think of something that has triggered nothing but eyes. I think Ross was like absurd. Yeah. So something like this. So how many times is it valid? I don't think there's a number. I think it's valid until it's no longer valid. I understand your question. You're asking whether it's kind of like a squeeze where it goes 8 to 10 bars before it kind of stops. I don't find that behavior to be necessarily true, although you got me thinking. I'm going to start paying attention to that and see if there's might be some validity to it. But it's just going to go until the signal shift. So I don't put a expiration date on it. Does the swing level of 100 include the 50s plus the hundreds? No. The swing level, basically, the way that works is, what's the best way to show you? I'm trying to find something that's like sideways. I'm just going to have to sketch it out, I think. So, swing levels work off of recent highs, right? So, for example, let's say that I have a chart that kind of looks like this. Right? I'm just going to drawing a general one. Okay, so if I have like really long-term swing levels, like let's say 100, then my swing levels would look like this. Okay? Let's say that your swing levels were like 10. Then you would have swing levels here and here and here, right? So really the best way to do that is actually just to test it out on your own and just see what makes sense to you. For me, I use 50 and 100, but some of you might want more. No, there's no max bear scan. I didn't make it because it's going to be so infrequently used. You can make it yourself. You can just basically invert the bull scan that I shared, and then you have all the pieces for it. Okay, so how do I use the indicators to know when to buy or sell? So literally the entire class, we just covered that. Should the indicators be on regular trading hours? Yes. Only for cash products. Futures would keep the overnight on. Day trading a 50-minute chart, do you recommend both high-low and trend or just trend? Use everything holistically. I would never split anything apart. So the only way that I would ever say to use high-low, so maybe this is a segue into something good. Let me think of an example here. Because this idea of splitting the indicators apart doesn't make a ton of sense to me. But it does make sense in one specific case. So let's use this one. Yeah, this is a good example. So here, this is a perfect example. So here you got a sell, right? Here you got a sell. And again, just to go back to this sell would have probably triggered here in reality, right? This is a chunk of bars. It doesn't really matter because look at that signal before it drops, right? But here's where it matters. You see how you have a sell here? Somebody might say, okay, what's a sell here? It never triggered a buy, right? So in this instance, and keep in mind, we covered this a lot. So make me proud, guys. Make me proud that you've been paying attention because we covered this. But I'm happy for the question because it gives me a chance to really hammer this home because this is a really important thing, and it's a really simple thing. There's going to be gaps in the logic for grays. There's no clean way, guys, to code gray bars. Think about it. It's like I show you an ink blot test, and I tell you what does it look like. You say a cat. I show it to somebody else. They say a bat. I show it to somebody else. They say a dog, right? And so there's this. There's no clean way to code grayness, and nor do you really want to, in my opinion, because it's a mess. But there is a fix for. There is a patch. There is a patch. Remember that when the bars are gray, and this is super simple, guys, but really powerful. When the bars are gray, your only signal is high-low. So yes, did it tell you to sell here? And does that, is that a good signal based on this right there that happened before it dropped? Yeah, that's a pretty good signal. Could somebody say, well, then why did I not get a buy signal for that entire move? Well, I don't have a signal that would trigger from gray to gray to gray, but what I do have is a trick that works in every situation when it's gray. Gray bars, I want to be really clear. Gray bars use high-low. Colored bars use everything else. Gray bars use high-low. No, George, there's no way to do it. I mean, there's just no way to work around that. Here's the thing: the higher time frame stuff is absolutely necessary for the indicator to work the way that it does. You guys seem to be kind of focusing more on these like one-off kind of things, when in reality it's an 80-20 kind of situation. It's actually perfectly that. 80% of the time it's not an issue whatsoever, and 80% of the time you end up with some of the most sophisticated, strongest possible signals that wreck and destroy everything else that's out there. 20% of the time you do have to think a little bit, and I've shown you every kind of way to think about it, where you have to ask, okay, what's really going on here, right? Kind of like the SanDisk example would be one of them. So if it was 20/80 the other way, then I would think it's an issue, but it's really not that big of an issue. Here's what I would say. Use the indicators. Just use them. And you'll find for yourself that it's probably less than an 80-20 issue overall. In terms of changing it to not use higher time frames, there's no way to do that, at least right now, that I can possibly think of, that does not completely increase the amount of noise in the system to a point that none of you would even like to use it, myself included. No, this is a product of 9 years of work. The indicator initially started by looking at the time frame that it's on, and then the amount of noise was made it unusable. I mean, if you can go back and look at my webinar 1, I showed you the first iteration of it. By introducing the higher time frame aspect of it, that's what made it a star. But the problem that it develops is that when you have the white bubbles, then when you show it to folks, they can say, well, that happened on Tuesday and now it's Friday, and I'm 2 days late. Well, it's an 80-20 issue. And whenever you have like a white bubble, you can always use a smaller time frame to go with that. So most of the time it's really not that big of an issue. Where does high or low volume fit into the equations? It doesn't factor into the system at all. There's no volume input. So if it's high volume or low volume, the system's completely blind to it because it's not looking at volume whatsoever. I do like the question though because it allows me the chance to say something very quick on volume, and that is that I think the traditional understanding of volume is probably flawed to some degree, because if I throw volume on this chart, all of this rally except for Friday is on low volume, right? So most people, I think, have this idea that high volume equals conviction. And I think high volume equals conviction as it breaks out through a level, but not necessarily in a trend. So I'll answer your question that volume doesn't factor into the study whatsoever, but it allows me maybe a more interesting segue to say that low volume and uptrends in this market is actually a feature, not a bug. So maybe also review how you view volume and see if it makes, see if you're kind of viewing it the same way or not. So I look at volume as needing to be high for breakouts, like breakouts through a level. I want high volume. But for trend moves like this, as I'm showing you, you can see the volume for yourself. The white line is the average volume, and look, it's like radically below average. And this has been the biggest rally of, that I've seen in probably forever. When filling in the weekly score sheet, occasionally one of the scores comes up as neutral in A. Would that count as zero? Something else? Example is A lab weekly score. Let's see. Oh, I see. I get what you mean even before I look at it. Yeah, so in that instance, that means that there's not enough data. So you're seeing this. Yeah, thanks for bringing this up. See, this is what's helpful because you guys catch all these little like peripheral things. Yeah, there's just not enough data here for the indicator. So the high-low has data. The true momentum doesn't seem to have enough data. There's something that's missing here. I'm not sure. There's actually, this is a little bit, oh, you know what it is? I know what it is. I know what it is. It doesn't have a 200 period moving average. I can maybe fix that. I worked on it, but I couldn't find a way to fix it, but I could maybe fix it. So you see how it has a momentum input? So it actually is registering correctly with the indicators. It has been for a while, but it doesn't have a trend input. And the reason it doesn't have a trend input is because it doesn't have a 200 period simple moving average. And so the indicator doesn't work. So you would need 200, you need 200 bars to have that, and this doesn't have it. Honestly, in this case for A-Lab, I would probably just go ahead and write down 100, because the goal that I have for you guys is that you can kind of see this chart and tell me what the score is. Like maybe that would be actually a really good way to finish the class is I pull up charts, I cover the score, and you guys tell me what you think. So maybe just a thought experiment, but here on A-Lab, this would be very close to 100. Both lines are positively crossed. There's a big spread between. Both are above 50. You're getting max points for that. This is thrust confirmed. You're getting max points for that. You have the 8 above the 21 above the 50. The 200, whenever it populates, will probably be somewhere in that neighborhood. This is a 100% chart. Somebody's looking at Tesla on the daily. And you're talking about daily candles are colored green, but it says neutral on true momentum. Interesting. Ah, I see. Hmm. Funny thing is, I know what it is, but it's not an issue. But I can kind of see from your perspective how I would look like that. So here's what it is. This line is below 50. This line is above 50. The only way that that's ever going to not be neutral is if the difference between these two lines was 10. So you see how it's a 48 half and a 56, let's say 56 half. So the spread there is 8 roughly. So what's the reason that this is neutral is because this line's above 50, this line's below 50, and the spread is 8. If it was 10 or greater, it would override that and make it positive. No, I mean I always go with the score here. And even if you did use, so let's say that you followed the process, you said, okay, that's neutral. Look here. If that's still giving you the same thing. What I would rather you do is if you have gray bars, right? If you have gray bars, not necessarily gray here, although they do tend to work in tandem. I would say this is actually somewhat of an anomaly. It's very rare to have neutral here and green here. So this is a little bit of a like an outlier. Most of the time, the vast majority of the time, I don't recall the last time I've seen this, the vast majority of the time, if it's neutral here, the bars are going to be gray. And if the bars are gray, then you do old reliable and you look down there. Yeah, T money. I think that's a correct. That's probably the accurate way to say it. The system isn't built for catching white bars. It's for catching after the white bar and the trend that follows. Yeah, it kind of goes back to my 80-20 point. And he's saying I think people are thinking this is supposed to catch the very high or the very low. Here's what I'll say: if you find an indicator that catches every high and every low, let me know what that is, and I will give you my entire net worth for it. I have not come across that one yet. No, the goal, guys, I want to be super clear because we want to be, we have different skill levels of all different types, and I want to be somewhat respectful. But it is, and I'll excuse this little bit of Sam slipping through as as I can't control my filter, but it is an amateur way of thinking to think that the game is to catch this right there or this right there. That's just, let me just speak openly because I'm wasting a lot of mental energy putting a filter on myself. That is the most amateur nonsense I've heard in a long time. That's not the game. That's just not the game. The game, and you guys know this, the game is from the third inning to the seventh inning, right? Third inning to seventh inning. Let somebody else have the first to the second and the ninth inning. The game is found in the middle. The buy signal uses the same logic as the sell signal. It show up in the closing of the fifth. Okay, yes, we've covered that. Do you use Russell or ATH for stocks or ETFs? Look at the difference between ETH or RTH. There's not any difference. What's the regular trading extended session? Okay, sorry, I was reading ETH as Ethereum. Do you use regular trading hours or extended trading hours for stocks and ETFs? Signals look different between. So if you're looking at stocks and ETFs, which are regular trading, cash hours instruments, always have extended hours off because yes, the signals will look different because as they should, because when you have extended hours, you have a bunch more bars that the indicator is looking at. So for everything that I do, I turn extended hours off, and only for futures do I keep it on. Now, at the end of the day, you can do it however you want, right? But that is best practice, and extended session hours, especially on illiquid things, is going to introduce a lot of junk data. Okay, I'm not entirely sure what the question is on Microsoft here, so maybe give it to me worded in a slightly different way. Okay, so let's go back to SPY. So I'm kind of questioning whether I did my job here today or not on some of these questions. Okay, so guys, let's really get down on this one. Okay. Remember, this is really important for the purposes of repainting. Let's blow this up. The only thing we need is this. There's a difference, guys. The SPY chart will never repaint. There's a zero. There's a point zero point. 0.01% chance this would ever repaint. Why is that? Because the spread is colossal. So yes, you can have a down day, you can have another down day, you can have another down day. This is never going to reprint because the spread, the only thing that's going to happen is the fast line is going to get closer to the slow, but it's not going to reprint because the spread is too big. So there'll never be an issue here. The issue is when it looks like this, and then on Friday you get a down day, right? So when it looks like this will never reprint. Also, this is really important. I'm kind of questioning myself here now. The idea that you're going to get a down bar here, a sell signal on Friday, is just not even remotely a possibility. So let's think this through. Maybe I should have asked for questions earlier because, damn. Okay, let's think this through. But I appreciate it. I appreciate the question. I truly do because it identifies a weak point potentially in how I presented this that I maybe was not aware of because I thought it was self-evident. Okay, so my goal with you, aside from the let go, my secondary goal for you was so that you could read the indicators and understand how the score works, right? So let's look at this. The 8 is here, the 21 is here, the 50 is here, and the 200 is here. Okay. From a structural perspective, what has changed? It was a down 90 points, right? That's a big move. But what has changed here? Did anything change from a structural trend input perspective? Not at all. So the trend is still max bull, despite the fact that it was down 90 points. Okay, so there's no change there. We can identify that. That's not going to change. We get max points for trend based on how we've defined trend. The 10 is above the 20, is above the 50, is above the 200. And frankly, that's going to stay that way for a while unless something massive happens. Okay, so trend is not changed. Let's move on to true momentum. Okay, we had a down day. Okay, well, you see how much cushion this thing has? So let's say that on Monday it kind of looks like that. And then on Tuesday it looks kind of like that. Will this still be positively positioned with the lines like this as opposed to how they are now? I'm actually going to ask for feedback on this one. Yes or no? Yes, right? Yeah, let me draw it in again, right? So even if you collapse, this is still above 50, fast above slow. This is going to be giving you points for a while. The only way that you're going to lose points on a down day, and actually thank you for bringing the question up because this is important. The first thing that's going to crack in either in a trend shift is going to be this guy, right? In the same way that, perfect example, nice little arrow at the lows. Thank you very much, high low. No bad signals since. Thank you very much, high low. But look at the arrow there. Notice how this arrow was happening before this arrow. So what do you think is going to happen on the other end of this? More than likely, there's going to be an arrow here at some point, and then at a later point, there will be an arrow here, right? Similar to this. You see what I'm saying here, right? So in this instance of SPY, the first and only thing that's going to crack first is going to be the high-low. So you might get an arrow, let's say that Tuesday's limit down. Let's not be so dramatic. Let's say 2% down. Then you'll get an arrow down on high-low. Okay. Well, and this maybe it was important, and for those of you who stuck around, you'll get this little bit of gold. If you have an arrow down on high-low, right, but this is still good, and this is still good, what's your score going to be? This is a impossible question. I'll have to give you the answer because I didn't tell you. In this instance, your score drops to 75%. Okay, well you do know this. A 75%, is that a bullish, neutral? What is that? It's still bullish, right? If anything, 75% means you buy at the 21 or the 20. Okay, so thanks for bringing this example up because I think maybe this shows some gaps in what I thought was a well-ordered presentation, but I guess this is something that's important. So no, the idea that SPY would ever show a sell in this condition, given the amount of fat that the bulls have to work with this pattern, it's just not going to happen. The very first thing, and then I'll move on to the next question, but this was a good one. The very next thing that's going to happen, if there's going to be any weakness in SPY, it'll crack first on high-low. And then from there, it'll spill over. But you're not even there yet. Okay, I kind of lost my place here. Bear with me. Now, let me show you a different example. Maybe I could find one. Let's see. Not a particularly good one. Let me think of another one. Now that I'm looking at this XBI chart, this is disgusting. You see how XBI is making all these moves? This is neither here nor there. I was just looking for an example. You see how XBI is making all these moves here with gray bars with a negative momentum? That looks like a short. All right, so let me keep answering questions as much as I can. Do you trade 0 DTE SPX? If so, any suggestions? The question would have to be a little bit more broader, more narrow than that, because you've already chosen an instrument and you have the indicators to guide the way. If you're trading 0-day SPX, actually, you know what? My first suggestion to you is to throw the comment of have you earned it back at you? Have you earned the ability to trade a 0 DTE SPX? Meaning, have you done it successfully enough times to where that could be a viable strategy? If you're newer to 0 DTE SPX, my actual suggestion is actually to use maybe 3 or 5 day. They're going to move the same, but it'll be slower, more gentle. You will have to close the trade. You can't just let them expire like you can 0 DTE sometimes. But the process will be a little bit less noisy. It'll be a little bit more reliable. So my advice, without knowing anything else aside from that question, is if you are newer to 0-day SPX, consider using 2 or 3 day SPX as a gentle introduction to it. Is Microsoft a buy on the daily chart? It's a user's choice. It's not a short. It's never a short. It's too strong for it to be a short, but it's a gray bar. So what do we do with gray bars? We rely on this. Thrust is unconfirmed. Okay, not great. This is a weak example of a setup, right? So one thing that you want to get really good at is not trying to make too much sense of this kind of stuff. If you do have to make sense of it, here's what I would do. I would go to a 4-hour chart and look at that. Okay, well, 4 hours still looks gray to me. Okay, well, let's find a trend. Can we find a trend anywhere? The hourly, this doesn't look like a trend to me. So what I would say is I would just remind you, most of the times things are just messy. Here's also what I can do for you. So why don't we look for something that actually looks decent, and then I'll just reverse engineer it. So like PL, right? Now I'm not saying PL works, because if the market gets creamed, This is a very high beta, messy stock. But you see how when I pull up Microsoft and it has gray bars and I'm having to look inside of it and I'm twisting my head, right? We're doing this dance, right? The whole point of the class, guys, is so that you don't do that. There's a million things in the world. We do not have to stare at Microsoft gray and try to make sense of it. And then there's this even worse belief. Well, Sam, I did what you told me to. Microsoft was gray, so I went and found something else, and then Microsoft is up $20. Okay, that's it doesn't matter is the answer, because that's like poker, right? If you get a jack and a three in poker, it's a terrible hand. You fold it unless you're planning on playing like a maniac and bluffing. But in most cases, jack three in poker is a fold. So then you fold jack three, as you should, and then the flop comes jack three three, and you think, oh, I should have bet that. I knew it. No, you shouldn't have. That is the most amateurish way of thinking, right? I should have held my hand because it hit. So 2 points. One, with Microsoft, it's gray, and I don't necessarily see a clean setup either way that doesn't require some leap. It's not a short, I can certainly say that. And if you were looking to trade it, just trade it on smaller time frames that are exhibiting trending behavior. This is an example of something that is much cleaner. Now, I'm not saying this works because the market does need to work for this to work, but it is clearly, something that has a squeeze. That's why it popped up on the list. It's got a squeeze, and it has a very high score. So just a reminder, most of the things that you're going to look at are noise. If it doesn't make sense to you, and the indicator will make sure that it makes sense to you, all you have to do is use your eyes. If the indicator is not popping to you, find something else. Hey, thank you, Myron. Thank you for being here. Yeah, the high low is always going to reflect the time frame that you're currently in. So high low, if you're on an hourly, it's hourly. There's no higher there's no issue with that. When a buy signal prints, how many new bars going forward is it still valid to enter the trade? As long as the buy signal prints and you can control your risk, the trade is valid. You can get a situation where it doesn't pull back to the 10, but the candles will still be green. Absolutely. So that's happening a lot, just because there's no pullbacks anymore. But if you look at something like SMH, like, actually, let's go even crazier. Let's go Intel, yeah, without a single pullback. So this is a good example. So here on Intel, and again, for the folks that are like, oh, the bubble this, the bubble that, look at the moves you're catching, folks. Like, and this is a clean one, right? This the only ones that I would even maybe let's maybe dissect this one. I don't want to get too in the weeds on this, but let me just dissect this one for a second. Okay, I see it. So this one gave a sell here. The sell here, it actually would have triggered here, but and then you get the buy, and the buy is clean. I mean, green and red rarely have issues. It's just the way that, and it's situational either way. So here's an example of what he's talking about. So you get a green buy here on Intel at 50, and it's green bars, green candles the whole time, but it doesn't trigger another rebuy at all. Why is that? You should be able to answer this. Hopefully. Starting to question my my communication skills a little bit here. Yeah, so this one triggered a buy here because it changed from gray to green so fast in that little period of time that it triggered the buy. Okay, so notice how here, when it reconnects with the 10, it's light green. Light green does not trigger buys at the 10. Here, it's dark green, but it's so hot that it's so far above the 10 that it's not triggering buys either. So the way that I would read this is, and this isn't just Intel, this is anything. The last signal is the current signal. And then from there, if you want to chase it and do whatever you want, that's between you and your trading plan. But always remember that the last signal is the current signal. And you know, if it doesn't ever pull back, then it can't ever actually trigger a buy against the level that it's designed to trigger a buy. No, the buy and sells appear in that moment. They don't wait till the very end. They appear in that moment. Yeah, I think we yeah. If we're playing the daily time frame, we will get the signal to enter during the day, or is it tomorrow? It always will happen on that day that it's printing. The signals aren't. Man, this is so tough. Like you really have to just you really have to kind of like just. You have to see it in action. There's no like cleaner way I can say it. I wish I could show you like a better example, but you guys don't seem like it doesn't. I don't know if it's not clicking or what. So let's say, let me just think of an example. I'll just use this example. So here it goes from gray to green, and it does so rapidly that it triggers the buy here. Okay, that would be present at whenever that day is occurring. So if I looked 2 hours before the close and the signal was true, it would say buy. If I looked in the morning and the signal was true, it would say buy. If I looked in the afternoon and the signal was true, it would say buy. If I looked at the close and the signal was true, it would say buy. Okay, so that's that. One last time, so we're all on the same page, and really try to go back and rewatch this at some point if this is not immediately clicking with you. I understand there's nuance to this, but it was explained, and it's not all that complicated, I think. This is the example. Okay, so one, as you guys grade yourself in terms of how well you've understood the material, see if you can grade a chart, see if you can look for things on a chart that would cause it to change. The primary one is going to be the true momentum. When you have compression of the lines here, then that nukes the score, right? You go from getting points because the lines are correct to when they're no longer correct, all those points go away, right? And so what happens? The bars turn gray because you've lost a ton of points right away. What I'm trying to say is that if you looked at this chart in real time, this bar would have been green on Monday. That's a Monday bar. This is a Friday bar. Okay? We're on the same page there. Monday, Friday bar. This is 1 week of trade. That's a Monday bar. That's a Friday bar. If you looked on Monday, that bar would be green on the close. If you looked on Tuesday, this is probably, now that I'm looking at it a little bit more closely, the gap down is likely what triggered this. So on Tuesday, the second bar, this bar, so let me just draw it out. This bar on Monday close would be green. Okay? Monday close, this bar still green. The gap down, close lower, likely triggered the compression here. So what happens? This bar correctly becomes gray in the moment, completely as you would expect. However, because it's a 5-day look back on daily only, then this bar would retroactively color gray because of the compression from the drop and then trigger the sell. This is one of those things you just have to work with. If this did not click the way that I just explained it, there's no better way that I can explain it. And you just have to work with it. And for the pushback, for the folks that are like, well, it didn't catch the absolute high, who cares? Who cares? There's no professional trader that I've ever met who's trying to catch absolute highs and absolute lows. That's amateur hour. So the goal is not that. The goal, and let me kind of go back to this one. So Intel. A buy at 50. It runs all the way to 133. It's so hot that even though it has a sell signal here, you see how the lines are compressing? It still hasn't triggered a sell. Let's say it triggers a sell, and this is not even a great example, but let's say it triggers a sell on Monday at 100. Okay, well, you just, all you had to do was buy there, and then you got dumped out at 100. You made a double, right? And there's countless examples of this. Like, there's literally countless examples of this. So what I would say, guys, is just specifically for the white reversal stuff, that's as clear as I can make it. The example I just gave you on SanDisk. Every question that I'm going to answer from now until the next 20 minutes when class is over is going to be a different question, if you guys have any more. But if that didn't make sense, I think maybe just follow up with me on email, or really the best way to do it, go out there, swing the golf clubs. Use the indicator. Use it. It works. I know it works. In simplest terms, green candles and green momentum equals buy. Red candles and red momentum equals sell. Gray candles means use. Yeah. I mean, it's amazing when you can say it that simply, huh? Yeah, no, you're correct. All of that is correct. Let me reread it just because it does summarize everything we've covered so far in a very nice way. Green candles and green true momentum equals buy. Red candles and red true momentum equals sell. Gray candles means use high-low. You got it. Okay, so this is going to be the very last thing that I cover on this, because I think I think probably at this point I have to believe that I'm speaking to the minority of people on this subject. Not every buy and sell bubble is delayed. It 100% has to do with the positioning of the true momentum lines. If you have a large spread between the lines, they will never reprint. The reprinting is subject to happen on white bars when the lines are very, very close together. I mean, I don't want to raise my tone here, but it's like, I don't know how much else to describe this. So let me reset my chart here. This is not a thing that happens all the time. This is a outlier event. It's very important because this is going to affect your confidence if you don't understand what I'm saying. It's an outlier event. This is not a feature. It's an outlier. The way that you understand it is, are the lines super close together? If they are super close together, then on any given day of this 5-bar window, they can reprint. If they have a spread between them, like we looked over here on SPY, that will never, ever, ever be an issue, right? There's too big of a spread here. So here's the way I would summarize it, and then I do have to move on from that particular topic. This is subject to reprinting. This never subject to reprinting. That's it. If you are concerned about it, use a smaller time frame, and you can always look inside of the tightness and see what it looks like, and then go off that signal. So let's say that we were here, right? So let's put ourselves in two different places. This is one moment in time. This is one moment in time. For this moment in time, there's nothing to do. Super easy. We just follow the colors. No issues whatsoever. We don't expect any issues. No reprinting. Every bar will print on that day. Trust the signal, go with it exactly as you expect. Happy-go-lucky, great. Here, it requires more depth, correct? So here it requires more depth because there's a tightness here, right? And on any given bar, given that the look back is five days, it can change, right? So the only time that it'll ever reprint is when it looks like that. If it ever looks like this, it will not reprint. But to move on, it's an 80-20 thing. It's most of the time it will not be an issue. The reason I brought it up and I wanted to spend some time on it is so that you're hyper aware of it, so that you can just use a smaller time frame. So here's what I would do, and then I do have to move on finally. That here, I changed nothing. I just go off the colors, the bubbles, the labels, everything I just showed you. Here, I would probably suggest using an hourly chart. Because ask yourself, what is the indicator really telling you when the lines are that close? It's not really telling you much. So use an hourly time frame, and then you can navigate that way. Thank you. Yeah, so you could say it this way too. If it's not a clear setup, just wait for the next opportunity. Yeah, that's actually a running theme that I was trying to keep going here. Okay, guys, I think I got to start winding things down a little bit. I'm not really seeing any super critical things that are not in the presentation. Most of what I'm seeing is actually has been answered and is in the slides. I'll make sure that these slides are posted as well when the video is uploaded. So you're going to have the slides, you'll have the video, and then you can certainly feel free to review that. After you review it, just let me know what doesn't make sense via email. So I do want to say this, and we'll see if I regret this one. You guys have me as a resource, right? So let's actually start winding down. Yeah, let's wind down because I'm not seeing a whole lot that's additionally super valuable, and I think we've kind of covered everything as much as I possibly am capable of today. So one, let me start by saying this: it should all be in the slides and in the class at this point, the class recording. So most of the answers that you're looking for will be found in there. Let me also say this. I am certainly here as a resource for you. If you have any questions, any charts that you want to review, trades that you want to review, I'm available to you via email. Now, give me some time because, it might be busy, but use me as a resource is really what I'm trying to say, right? If somebody offers themselves as a resource and they're the ones that made the indicator that you're using, it's probably a good idea to use them as a resource, right? So I'm not, I'm highly encouraging you to use me as a resource. So I'll say it that way. So any questions that weren't answered, send me an email. If you have a chart that you have questions about, send me an email. I'm open to speaking to you about anything other than scans or tech support. So if you have any questions regarding those two topics specifically, do contact support. They will be able to help you out with that. But let me just reiterate that I would be happy to be a resource for you guys. I get that it's a new indicator. It is very, in my opinion, very intuitive. Some of you guys have exhibited that tremendously in some of your trades that you've done. We've seen the feedback. But like any new thing, and just like anything in life, it's nice to have somebody to chat with. Let's just call it what it is. So if you do have any questions on this, shoot me an email, sam@simplertrading.com. I'm going to scroll just a little bit more, and if I don't see anything else, then I'm going to kiss you on the cheek and send you on your way. And stick around. Don't let me kiss you on the cheek. If you stuck around this long, stick around to the end. What's another 5 minutes? You used the indicator last week. You made insane profits on NDX options. You were able to hold longer. Thank you. Okay. Yeah, it looks like most things are either answered by the mods or the rest of them. All right, guys. Well, let me go ahead and start signing out here. So again, thank you so much, guys, for being part of this class. Let me kind of go back to really what matters here, right? Let's get back to what really matters here, and it's one of these, right? So I am absolutely, for lack of a better term, blessed to be here with you guys. It's all so improbable. All of this is just massively improbable. The fact that I once worked at Apple and I had that as my screensaver, and now by just pure chance, I work for a guy who has one of like the only lithographs of that painting or that print that exists, it's nuts, right? When you think about all of the probabilities that it would take to achieve that. You guys, I spend more time with you guys, those of you that are in the MTT room, than I do with my own friends or family. Even for those of you that are not in the MTT room, I spent more time with you today than I'm going to spend with my friends or family this entire week. So I am very grateful for that. Without John having made the Library of Alexandria for me to study for 9 years, none of this would be possible. I am very aware of the fact that I have the goods with this indicator, and it makes me pretty excited, the fact that it's out there now, because I get the chance to get feedback from other people on it, and the feedback has been amazing. So thank you so much for being here. This was intended to be the Thriller album, and I think in this case, the last class, maybe I was the star of the show, and the indicator was, in terms of the Thriller album, the indicator was the backup. Today, the indicator is without question the star of the show, and it was an absolute pleasure to spend my Saturday with you, and I hope you have a good rest of your weekend. Cheers.